Happy New Year. I'm glad this actually worked or finally worked.
Yeah, I could say Happy New Year all through January. So great to have you with us, Kathy. Thank you for taking the time. I want to talk about your third edition of your book in a little bit, but why don't we talk about I'm interested in your thoughts about the U.S. stock market having the worst start in stock market history, and the fact that FX, except for a few exceptions, has been relatively stable. The dollar's been relatively stable during the sell-off in S&Ps. What's a think tank, you and Boris, thinking about all this? I know from a previous interview last time we were together, Kathy, and I want to validate this, you did say that you were bearish S&Ps because you believed the Fed was going to move, and the market fell apart a few weeks afterwards. Nice call.
Thank you for that. Well, I think first and foremost, this is very much the year of selling rallies. I think that everyone's realized that the S&P as well as many currencies and markets around the world have become extremely overstretched. And between the slowdown in China, the crushing losses in commodity prices, and the pain that the strong dollar is bringing for the U.S. economy, that we're not going to be seeing any meaningful gains in U.S. stocks this year. And in fact, I think that we're poised to see steeper losses in the coming months. Now, in terms of currencies, stability depends upon where you're looking, right? A lot of emerging market currencies are struggling. I was just looking yesterday. I was looking at some markets outside the ones that we typically follow, and the Argentinian peso is down 29% in the past 3 months. The South African rand is down 20%. We know that the British pound and the Canadian dollar have seen massive losses. I think the Loonie is down 10% in the past 3 months. So there are. So I wouldn't necessarily call this stability. Now you're right in the sense that there is very much stability in the euro dollar and
and that's what most people judge what's happening in the currency markets by what the euro's doing and the Dixie. So they're looking at a sideways move in Dixie, and you're right, moves in emerging market currencies. In fact, I want to ask you about this. Jim Rickards is now predicting, he talked about the surprises. First was the SNB valuation of the yuan, and he actually believes, and I think I asked Boris about it, that the Saudis are going to depeg from the dollar. So maybe some of these emerging markets may get the same idea, and that would have some ramifications for the dollar, wouldn't it?
Yes. Well, I just wanted to comment quickly. If all you're trading in the euro is euro dollar and dollar yen, you're missing all the other opportunities in many other major currencies. You may not have to delve as far as the Argentinian peso or the South African rand, but there's been a lot of vol in the crosses. There's been a lot of vol in, obviously, a lot of opportunity in pound dollar, dollar CAD. We just wrote this morning this move down in the pound dollar, and banking on the idea that Carney, we put our position on before Carney spoke, and we banked on the idea that Carney was going to be dovish. So if you're just sitting there trading euro and yen, there's been zero action, and it's quite boring. So I definitely encourage everyone to look beyond the two major currencies. Now, in terms of your question about whether Saudi is going to depeg from the dollar, it's tempting, but oil is still being priced in dollars right now. So while it may be tempting to do so, and it would maybe allow them a little bit more flexibility, I don't think that it's necessarily a reality. And even if they were going to get their act together and do this, by the time they put together that whole process, oil will probably have bottomed. I mean, in order to depeg from a currency and be able to how do I say this, to adjust your financial markets accordingly, it would take months, if not even a year or two. So by that time,
that's a pearl. So it's quite a process. So when a small country like Azerbaijan does it, maybe it's not as complex because they don't have the same amount of global trade flows and relationships throughout the world like Saudi Arabia would have. So maybe it's a matter of the country.
So my point is, by the time they get their act together to do all of this, I think that oil will probably have bottomed and maybe even on its way upwards. So it's a great conversation piece to have right now, but probably not as realistic, I think, as people would anticipate.
Okay, Kathy. So the book that you published, I'm not sure when the first edition came out, of Day Trading and Swing Trading the Currency Market. This is now your third edition. So the question to me is that even a professional like yourself, if you are creating new editions, that there are new things that you've learned along the way from your first edition that upgrades the book by what you've experienced between the updated editions. So how have you grown and what have you added to the books for this to go into its third printing?
Well, I mean, you're right. The first printing came out in 2005, so this is actually the 10-year anniversary of day trading and swing trading the currency market. And this book has been in very strong demand, which is why Wiley constantly knocks on my door asking me to update the book. And it's already available in terms of the information that is different. Let me just show everyone that the book is hot off the presses. One thing they did different this time around is that they made it a lot easier for you to carry it around by making a soft cover and not hard cover. The book needed an extremely deep refresh. When I first wrote the book in 2005, the world was very different. When I updated it in 2008, that was obviously before the financial crisis, and a lot has changed since then. And when I updated it in 2008, I added a couple of new trading strategies, but I did not update a lot of the statistics and information and the background about the currency profiles and all that information. So that's what we did in the third edition. We did a pretty deep, thorough update of every single chapter. And to be honest, 10 years later, reading the way I wrote the book in 2005 and 2008, I can't believe my writing has changed so much, because I was reading the book and I'm thinking, wow, this writing is horrendous. I think I form my sentence structures a lot better now or at least I think I do, than I used to. So
practice makes perfect, huh? Practice makes perfect. The more you trade, the better you get. The more you write, the better you get.
Exactly. I was reading the back of the book and I said, wow, this writing is horrendous. But, it's obviously something that people like a lot. So, I went through the entire book. I updated, all the numbers, all the statistics. We have 13, I think it was 13 trading strategies in the book right now. There's a nice chunky chapter on quantitative easing and its impact on Forex, what the Swiss National Bank did. This book is really, in my opinion, a primer for anyone who is serious about trading currencies. It's not a beginner book. It's an intermediate book that assumes all the basics, like what is a pip, what are parabolic SARs like you have in your charts, and what are moving averages. It just goes right into the trading strategies. It goes right into how to look at the market from a fundamental basis. And I think that it's why a lot of traders, you really appreciate the book, because it's a no-nonsense type of book. Now, what I really loved about doing the update was that I was able to go back and look at all of the trading strategies. Some of them, quite honestly, I haven't looked at for a couple of years. Some of them I use more actively. And it was really refreshing to be able to go back to the trading strategies, find recent examples and see that they're still working very, very well, regardless of whether it's a strategy like the I'm looking at the book right now. For example, like the fading the double zeros that I use all the time, or the inside day breakout, which has fallen off my radar because I'm focusing on something else. That all of those still seem to be pretty effective, and it was fairly simple to find analogies of the strategy working. So I really was encouraged by that, and I think in general, if you haven't picked up a copy of Day Trading, Swing Trading, the Currency Market in either its second or first edition, you're going to get the most value out of it, in the sense that a lot of information there. Ask anyone. Read the reviews on Amazon. It's a pretty well-written book, I have to say, and with pretty useful information. Now, for those of you that have the first or the second edition, I think what you'll appreciate out of the book is, um, a lot of the updates in the fundamental section, which technicals are technicals. There's two new trading strategies in the book, but technicals are technicals. But fundamentals is where things get really interesting, and how the world has changed, how it's evolved, and there's been a lot more macro event-driven trades that have happened in the past 10 years, and the book delves into how you could have taken advantage of that, how you can look for them in the future, and then of course a lot on intervention as well as commodity prices, which are really driving currency movement, bond yield spreads. We're riding the dollar CAD move upwards. Obviously not the entire move. I wish I was that smart. But when bond yields were starting to point to a stronger dollar CAD, that really gave a nice little leading indicator for how to jump into that trade. What's interesting is that dollar CAD right now is trading at a 12-year high, and the bond yields are moving in a different direction. And it's important to realize what the story they are telling us and how to understand them. So
that could be a market tell. That could be a market potential low in crude and near a potential high in Canada.
Yeah, I think it's possible. Picking tops and bottoms is always difficult, but I think when you have oil prices falling as much as they have, and if you look at where oil prices are right now, which is basically at $29 a barrel, that or slightly under $29 a barrel. That how low can we go? I think maybe we'll get to 25, hover around there. I don't think we're really going to get much more below probably 23, which on a percentage basis at these levels seem like they're a lot, but in dollar terms they're not really that significant, especially considering that where we had come from. And then you compare that to the fact that the yield spread between U.S. and Canada is starting to turn lower. That perhaps it may be the point to pick a top in dollar CAD. Now, of course, we have the Bank of Canada rate decision tomorrow, and if you take a look at one of the chapters in day trading and swing trading, the currency market talks about central banks and talks about what you need to watch for the Bank of Canada. But the Bank of Canada's rate decision is tomorrow, and they could lower interest rates by 25 basis points, and if they do, that would probably press dollar CAD to fresh highs. But if they did, they'd probably be one and done, and the short trade would probably be over. Short CAD, long dollar trade probably be over after that. So there is a little bit of event risk with the BOC, but the other, from the perspective of oil, from the perspective of the bond yield spread, and if you look beyond BOC, we should very much be nearing a top, in my opinion, in dollar CAD.
So, Kathy, you've read your early editions of your books. I'm curious if you've ever gone back to watch yourself on an interview, say perhaps you did in 2005 and then 2007, compared to now. And here's my guess, Kathy, that back then you were talking 80–90% technical about areas. If we take out this, it'll go there. If we take out that, it'll go there. And now, because of what you told me in your new edition about how you included the fundamental section, that you've become much more holistic at looking at market relationships and correlations and looking for things under the surface of charts to give you hints and market tells. Am I correct? And have you ever seen yourself from 10 years ago?
Well, actually, I've never been a pure technician. I think, what I've been doing for is fusing fundamentals with technicals. In fact, one of the things that that I've been doing for the past 10 years is handicapping economic data and using that as a catalyst for our trade. So it's also
so I was wrong. I have no problem with that. People choke on those words. I was wrong and I don't know. So I was wrong. So then why in the previous two editions didn't you include this kind of fundamental data? Is it because of the market environment has changed? We went into a more central planned market after the financial crisis, and that environment has really changed compared to earlier editions?
Well, I don't expect since you know my entire personal history. But in terms of the book itself, it's always had a good number of chapters on fundamentals. And I think that's what really makes it unique because the title of the book is actually Day Trading, Swing Trading, the Currency Market, Technical and Fundamental Strategies to Profit from Market Moves. And, but you're absolutely right. And fundamentals become extremely, extremely important because if you use technicals purely, and let's say, you like to use the RSI, the stochastics, these things have been in overbought, oversold territory for a lot of the majors for quite some time. And if you use those on a pure basis, you'd be, selling dollar CAD all the way from 140 to 145 and, be stuck with massive losses. These trends are driven by fundamentals. And I think in this type of market environment, they have become extremely, extremely important. And I think that if you have anyone listening to this is not already staying on top of the big stories, you need to be. You need to understand how commodities impact currencies. You need to understand which bond yield spreads to watch. You need to understand what central banks are doing. Because when we trade at BK Forex, we always use a fusion of fundamentals and technicals. For our big trades, which basically had about an 80% accuracy last year, our thought process is basically we determine the broad-based theme of the markets. Risk on, risk off, Fed tightening, ECB easing, oil prices falling, basically the big stories. Then we turn to our charts to see what levels are attractive to participate in the overall story. But we only take the trade when there's a catalyst. So, for example, we took that pound dollar trade this morning. We sold pound dollars at 143 and rode this move lower. Why did we decide to take this trade? Well, first of all, we believe that this is the year of selling the British pound because of the whole Brexit story. That Brexit is going to pose a very big risk to the UK economy. We also believe that the sharp fall in commodity prices was going to, and the market volatility was going to make the Bank of England less inclined to raise interest rates in 2016. So overall, we believe that the pound is headed lower. Now, we found some, pound was obviously deeply oversold, but we found that 143 was an important short-term resistance level. So we placed our limit orders out to sell at 143. But we only did that because we had Carney speaking, and we believed that Carney was going to be dovish and drive the currency lower. And so our trade got triggered around 5 a.m. Off of the better than expected UK CPI number. So we got into our short trade at that time. And when Carney spoke, that's when we had those crushing losses in the pound dollar. Now, of course, I have to admit, I didn't ride it all the way down to 140, 130. We only rode it down to the lower 142 here. But, it was still a really good trade for this morning. And that's the way we think. And that's our thought process. So one of the trades that we're in right now, that I'm obviously hoping will work out is this morning we had the New Zealand's dairy price auction. For the second time in a row this year at both auctions, dairy prices in New Zealand fell. In our experience, there tends to be very strong continuation during the Asian trading session to some of these dairy price moves. Our order hasn't got triggered yet because, once again, we use technical. We just don't sell at market. We're selling on a bounce here. Closer to 65 cents, so we're waiting for it to be triggered. If it triggers, we've got another catalyst tonight, which is not only the continuation that we believe will happen off of the global dairy price auction, but also tonight's consumer price report from New Zealand. So those two things we believe will drive Kiwi lower. So we're waiting to be triggered. We have our orders laid out, a little bit above current levels, and that's the way we fuse our fundamentals with our technicals.
Okay, so Kathy, it makes me think my account was hacked because I used the RSI to short Canada from 140 to 145. So that was it's interesting you brought that up because I was trying to top pick that. I'm still accumulating crude. Thank you for sharing that Kiwi idea with us. Why don't we just wrap it with what you feel the macro events for 2016 kind of look into your telescope, away from your microscope, and what your thoughts are for 2016. What's the biggest surprise that could happen in FX markets this year?
I think the biggest surprise would be if the Fed is one and done. They could be if the market volatility continues. They could be if China slows further. They could be if oil prices remain depressed. That is not what the Federal Reserve is telling us right now. Even amidst all of these market moves, Federal Reserve officials have been saying that they think that this is isolated to China. They think that the U.S. economy is going to be immune. They're trying to paint a good story of the U.S. economy. And the market is still pricing in 2 more additional rate hikes this year from the Fed. And so I think the biggest surprise is if the Fed is one and done. But what I think will be true regardless is what I started our conversation with, which is that I believe that this is the year of selling rallies in the FX market and the equity market. And so I think that if you use that as kind of backdrop for the way you think about your trades, that can give you kind of a strong perspective, in my opinion. And
okay.
Just to add in, how do we determine some of these things? If you don't understand how to do so already, these are some of the kind of thought processes that you must learn, because fundamentals are very, very important. I think trading just pure technicals is like driving with blinders on and not knowing, what's on, if there's any cars on your left or right side. You can get into an accident without even realizing what's happening. So I think it's extremely important, and you want to start the year right. 10-year anniversary of day trading and swing trading.
Yes, hold that up again. Yeah. Beautiful looking book. It looks like a workbook almost. Are there pages in there that where people can do their own work? It looks like a workbook, actually.
I wish it was, but it's just Wiley's choice of publishing as a soft cover versus a hardcover this year, regardless.
I'd like an autographed copy.
Okay.
What do you say? All right. I'd like, and people can.
Address. I'll send you one.
All right, and people can get this book at Amazon and where else. And the best place to follow Kathy is her Twitter handle is @KathyLienFX, and at BK, is it BK Trading Management or
BK Asset Management. So yeah, it's available on Amazon. It's available on Barnes and Nobles, all the big publishers. Wiley.com also is selling it, and I think that, I'm not too sure. Amazon had it, at the normal 30% off when they were first selling it. I'm sure the price will change as time progresses. But if you have any questions about it, you can always hit me up on my Twitter feed at KathyLienFX. And as you said, bkforex.com is where we produce these trading signals that I talked about this morning. And then bkassetmanagement.com is where you can read our research. So thank you so much, Dale, for giving me the opportunity to talk about the book and to talk about my thoughts in the markets this morning.
I'm proud to call you my trading warrior sister, Kathy. It's always a pleasure. I enjoy your commentary when I see you on CNBC, and Kathy is a great follow, in my opinion. I believe that her book is going to be worth every penny that you spend on it. And the trading ideas I've heard from Kathy over the last 2.5 years in LAR have been excellent. Thank you so much for edifying our community today, Kathy Lien.